Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, October 20, 2023. Global stocks retreated and oil prices climbed on Friday as investors reacted to escalating geopolitical tensions that threatened to spread conflict across the Middle East. European shares dropped, with the Stoxx 600 index declining 0.6% to hit a 7-month low. Asian equities also headed for their biggest weekly decline in 2 months. U.S. stock futures steadied after earlier losses. Gold approached $2,000 an ounce, while oil traded above $90 a barrel. The price spikes came as the Pentagon reported increased drone attacks in Iraq and Syria. An American destroyer also intercepted cruise missiles fired toward Israel by Houthi rebels in Yemen. Israel's military struck Hamas targets in Gaza overnight and hit Hezbollah assets in Lebanon in response to fire from the Iran-backed group. The risk premium in crude has shot up again, said Vandana Hari, founder of Vanda Insights. As long as the Israel-Hamas tensions run high, crude will remain susceptible to further spikes on signs of an escalation. In currency markets, the US dollar paired earlier gains. The British pound weakened after UK retail sales tumbled more than expected in September. Unusually warm weather last month discouraged shoppers from spending on winter items. Sales volumes dropped 1.4% from August, exceeding forecasts. Meanwhile, the Japanese yen remained volatile as it approached 150 to the dollar. Japan's finance minister Shunichi Suzuki said it was important for the yen to move stably based on fundamentals. U.S. Treasuries advanced, led by gains in 10-year notes. The rise came after Federal Reserve Chair Jerome Powell signaled the central bank is inclined to hold interest rates steady at its next meeting. Powell cited evidence that current policy may not be too tight. Market odds of another Fed rate hike in December fell below 50%, down from recent weeks. Traders are now pricing in potential rate cuts starting as early as July 2023. In China, record cash injections by the central bank may provide some support after stocks erased all gains from the massive reopening rally late last year. China's economy has been challenged in 2022 by weak demand and a property market downturn. However, Morgan Stanley advised against buying the dip in Chinese shares. Analysts say fragile market sentiment and continued foreign fund outflows could persist in the near term. Meanwhile, concerns around China's property sector continued as major developer Country Garden Holdings missed a dollar bond interest payment. The default signals mounting struggles in the real estate industry. Looking ahead, more speeches from Fed officials are expected after Powell's latest remarks. He indicated the central bank will take a careful approach to further hikes, saying there are signs tightening policy so far is having an impact. The mix of geopolitical tensions, inflation concerns, and central bank policy stand to keep markets on edge into the weekend. While stocks remain volatile, demand for safe haven assets like bonds, gold, and the dollar continues. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Safe haven assets attracted demand early Friday as geopolitical tensions took center stage ahead of the weekend. With no major U.S. economic data on tap, comments from Federal Reserve officials remained in focus before the blackout period begins Saturday. On Thursday, Fed Chairman Jerome Powell acknowledged higher bond yields were tightening financial conditions, which could influence monetary policy. Assessing the right policy balance is complicated amid a range of uncertainties, he told the Economic Club of New York. His cautious tone made it difficult for the U.S. dollar to gain ground, with the dollar index closing lower. This week, the dollar was weakest against the Swiss franc, falling 1.08%. It gained 1.38% on the Japanese yen but dropped 0.5% versus the euro. In a televised speech Thursday, President Biden said he will ask Congress for $14 billion in extra funding to support Israel, according to sources. While the Senate may broadly support the plan, The House still lacks a permanent speaker needed to pass legislation. Following these updates, the bond sell-off continued with the 10-year Treasury yield hitting 5% for the first time since 2007 before pairing gains Friday. The euro climbed to a fresh weekly peak above 1.0600 against the dollar Thursday but lost momentum early Friday, trading narrowly above 1.0550. In the UK, September retail sales unexpectedly dropped 0.9% from August, versus forecasts for a 0.1% decline. Bank of England Governor Andrew Bailey meantime expects a marked fall in inflation next month, according to an interview. Sterling came under pressure, with pound sterling to US dollar falling below 1.2100. The Japanese yen remained on edge as the dollar flirted with 150. Bank of Japan Governor Kazuo Ueda said they are closely watching currency moves and the potential economic impact. Gold extended an impressive rally this week to reach its highest since July above $1,980, attracting haven flows. Looking at equities, European and Asian stocks dropped heading into the weekend. The pan-European stock 600 fell 0.6% to a 7-month low. In Asia, stocks recorded their largest weekly decline in 2 months. Energy markets reacted to the geopolitical uncertainty. Oil climbed back above $90 per barrel, while natural gas futures jumped nearly 10% in Europe. On central bank policy, markets remain focused on the Fed's tightening path. Swaps now point to a below 50% chance of another rate hike in December. Traders are even pricing in potential Fed cuts as early as next July. The combination of inflation concerns, monetary policy uncertainty, and geopolitical tensions looks poised to keep markets on edge into the weekend. Safe haven assets like the dollar, bonds, and gold seem likely to remain in focus amid the volatile backdrop. Key events this week. Philadelphia Fed President Patrick Harker speaks, Friday. Some of the main moves in markets. Stocks. The Stoxx Europe 600 fell 0.7% as of 10:02 a.m. London time. S&P 500 futures were little changed. Nasdaq 100 futures fell 0.2%. Futures on the Dow Jones Industrial Average were little changed. The MSCI Asia Pacific Index fell 0.5%. The MSCI Emerging Markets Index fell 0.5%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.0587. The Japanese yen fell 0.1% to 149.96 per dollar. The offshore yuan was little changed at 7.3373 per dollar. The British pound fell 0.2% to $1.2121. Cryptocurrencies. Bitcoin rose 3.4% to $29,700.07. Ether rose 2.8% to $1,610.87. Bonds. The yield on 10-year treasuries declined 5 basis points to 4.94%. Germany's 10-year yield was little changed at 2.93%. Britain's 10-year yield advanced 1 basis point to 4.68%. Commodities. Brent crude rose 1.4% to $93.69 a barrel. Spot gold rose 0.5% to $1,983.96 an ounce. In conclusion, we'd like to thank you for watching Market Briefing, market analysis, and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.